Hi viewers, in this video we are presenting special terms point of view next video for the purpose of JO aspirants. Debenture, a formal document constituting acknowledgement of debt by an enterprise, usually given under its common seal and normal containing provisions regarding payment of interest, repayment of principal, and security, if any, it is transferable in appropriate manner. And next one, debenture redemption reserve, a reserve created for the redemption of debenture at a future date. Debtor, so who are the received credit sales, the person are called sundry debtor. Deferral, postponement of recognition of a revenue of or expense after its related receipt or payment to a subsequent period to which it applies. Common examples of deferrals include prepaid rent and taxes, unearned subscriptions received in advance by newspapers and magazines, selling companies, etc. Deferred expenditure, expenditure for payment has been made or a liability incurred but is carried forward on the presumption that it will be of benefit over a subsequent period or periods. This is also referred to as deferred revenue expenditure. Next one, deferred revenue, revenue or income received or recorded before it is earned and carried forward to a subsequent period or periods to which it relates. Deferred revenue expenditure. So already 4.05 explained about deferred expenditure. Same will be continued. Deficiency, the excess of liability over assets of an enterprise at a given day, the debit balance in the profit and loss statement. Deficit, the debit balance in the profit and loss statement. Depletion, a measure of exhaustion of a wasting asset represented by periodic write-off of cost or other substituted value. Depreciable amount, the historical cost or other amount substituted for historical cost of a depreciable asset in the financial statement less the estimated residual value. Depreciable asset, asset which is expected to be used during more than one accounting period, has a limited useful life, and is held by an enterprise for use in the production or supply of goods and services, more rental to other or for administrative purpose and not for the purpose of sale in the ordinary course of business. Next one is depreciation, a measure of the wearing or consumption or other loss of value or a depreciable asset arising from use. affliction of time or obsolescence through technology and market charges. It is allocated so as to charge a fair proportion in each accounting period during the expected useful life of the asset. It includes amortization of assets whole useful life is predetermined and depletion of wasting assets. Depreciation method. Any method of calculating depreciation for an accounting period. Depreciation rate, a percentage applied to the historical cost or the substituted amount of a depreciable asset. Development allowance reserve, a reserve created in compliance with one of the conditions for claiming development allowance under the Income Tax Act 1961. Development rebate reserve, a reserve created in compliance with one of the conditions for claiming development rebate under the Income Tax Act 1961. Diminishing balance method, the method under which the periodic charge for appreciation of an asset is computed by applying a fixed percentage to its historical cost or substituted amount less accumulated depreciation. This is also referred to as written down value method. Direct cost, an item cost that can be reasonably identified with a specific unit of product or with a specific operation or other cost center. Direct costing, a method whereby the cost is determined so as to include the appropriate share of variable costs only, all fixed costs being charged against revenue in the period in which they are incurred. Discount, a reduction from a list price, quoted price, or invoice price is also referred to the price for obtaining payment on a bill before its maturity. Dividend, a distribution to shareholders out of profits or reserves available for this purpose. Dividend equalization reserve, a reserve created to maintain the rate of dividend in future years. Earning per share, the earnings in monetary terms attributable to each equity share based on the next profit for the period before taking into account prior period items, extraordinary items, and adjustments resulting from charges changes in accounting policies but after deducting tax appropriate thereto and preference dividends divided, divided by the number of equity shares issued and ranking for dividend in respect of that period. Entity concept, the view of the relationship between the accounting entity and its owners, which regards the entity as a separate person, distinct and apart from its owners. Equity share, a share which is not a preference share, also sometimes called ordinary shares. Expenditure, incurring a liability, disbursement of cash, or transfer of property for the purpose of obtaining assets, goods, or services. Expense, a cost relating to the operations of an accounting period or to the revenue earned during the period or the benefits of which do not extend beyond the period. Expired cost, the portion of an expenditure from which no further benefit is expected, also termed as example. Extraordinary item, gain or loss which arises from events or un- and transactions that are distinct from ordinary activities of the enterprise and which are both material and expected not to recur frequency or regularly. This would also include material adjustments necessary by circumstances which, though related to previous periods, are determined in the current period. Fair market value, the price that would be agreed in an open and unrestricted market between knowledgeable and willing parties dealing at arm's length who are fully informed and not under any compulsion to transact. Arm's length is a term applied to any transaction on the assumption that the parties to the transaction would act without being influenced by each other by any other person. Fictitious asset, item grouped under assets in a balance sheet which has no real value. First charge, a charge having priority over other charges. First in, first out. Computation of the cost of items sold or consumed during a period as through they were sold or consumed in order of their acquisition. Fixed asset, asset held for the purpose of providing or producing goods or services and that is not held for resale in the normal course of business. Fixed cost, that cost of production which by its very nature remains relatively unaffected in a defined period of time by variations in the volume of production.